Global markets faced a sharp plunge with the Iran war outbreak, but stocks have surged back to record highs. What's driving this rebound amid ongoing Middle East tensions? After the Iran war triggered a swift market sell-off, major global indices have rallied impressively. Investors pushed stocks to fresh record highs, showing resilience in the face of conflict. This recovery suggests that markets expect either a limited escalation or swift diplomatic resolution. While specific company data isn't cited, broad indexes like the S&P 500 and MSCI World have rebounded strongly, reflecting optimism about economic fundamentals overcoming geopolitical fears. Even with stocks at new peaks, the shadow of the Middle East conflict looms large. The Iran war presents ongoing threats, such as oil supply disruptions and wider regional instability, which could quickly reverse market gains. Investors remain cautious as any escalation could trigger volatility. This tension keeps risk premiums elevated and means that the current market rally could be fragile if the conflict worsens or spreads. The Iran war risk has pushed energy prices higher due to fears over supply disruptions in the Middle East, a critical oil-producing region. Higher oil prices can weigh on global economic growth and corporate profits, creating a complex dynamic for stocks. While stocks have rebounded, rising energy costs pose a headwind that investors are closely monitoring, as prolonged elevated prices could dampen consumer spending and corporate earnings. Countries and sectors highly dependent on oil imports or exports are particularly vulnerable to the Iran war fallout. Emerging markets could face currency pressures and capital outflows if geopolitical risks intensify. Industries such as airlines, transportation, and manufacturing may also experience margin pressure from volatile energy costs. Conversely, energy producers and defense contractors might benefit from increased demand and spending in this environment. Looking ahead, investors should stay alert to how the Iran conflict evolves and its impact on global supply chains and energy prices. While the market rally shows resilience, the risk of escalation remains a wild card. Diversification and risk management will be key as geopolitical news continues to influence market direction. Staying informed on diplomatic efforts and energy market signals will help investors navigate potential volatility. The global stock market's rebound shows resilience, but the Iran war risk still casts uncertainty. For you, this means staying informed and cautious. Market highs don't guarantee smooth sailing ahead. Watch how energy prices and geopolitical news evolve before making big moves. Subscribe for daily updates on how world events impact your money and investments.